Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Financial markets are in a state of flux as uncertainty over US tariffs and a trade war continues. And cryptocurrency is certainly not immune. Bitcoin hit 3-week lows on Monday, while the second largest digital asset, Ethereum, fell a whopping 26% at one point. Then they bounced since Donald Trump delayed the imposition of tariffs on Canada and Mexico. So where to now for crypto? Remember, this is general information only, and you should seek professional advice before making investment decisions. Caroline Bowler is the CEO of BTC Markets. Caroline, welcome back to Fear and Greed.
Thanks so much for having me.
How do you think about cryptos in the current environment?
Oh, gosh, that's a big question. One thing to preface it, Trump is a fan of crypto.
Yeah.
And the people that he has placed around him, his army of advisors, are also pro-crypto. And they were pro-crypto before they came into the Trump world, the Trump ecosystem. So, and they're public about it. We know that they hold in the millions. Some are saying that they're even going to go to the billions of dollars. And I'm not just talking about Musk here. I'm talking about Howard Lutnick, for example, who is coming in as the Commerce Secretary and he is the founder of Cantor Fitzgerald, a trading firm, well-known crypto holder, very public about it.
Mm-hmm.
We know that they're bringing in, or they promised to bring in, and they've certainly been playing with a lot of crypto in the build-up to their inauguration. We know that they're bringing in digital assets and crypto as part of that, as part of their wider economic policies. So I think it's fair to say that this is a topic that has gone mainstream. We're seeing the tip over. We're certainly seeing that as we go into 2025. But what we're also seeing is a degree of vulnerability within crypto to the whims and vagaries of Donald Trump. And certainly that's what we've seen in the first couple of months of this year. I was just talking to a colleague before he came on about the last time we saw a dump in the price of Bitcoin, in particular early this year in January. And that was to do with the issuance of the Trump crypto coins, both for Donald and for Melania, where they sucked a lot of liquidity out of the wider crypto market, and we saw the Bitcoin price drop. And in the last 24 hours, as you've said, we've seen Bitcoin price drop. We've seen the wider crypto ecosystem drop accordingly. Again, based on Trump's whipsaw back and forth in his policies and what it is he's looking to do. So I think that while it's a strength, it's also a vulnerability for cryptocurrency, certainly in this initial period of time. I think too, though, that like once all of this starts to become more embedded in terms of the role of crypto and digital assets, both in the United States and the rest of the world, I think we can expect to see a little bit more stability come through certainly in the price movements.
It's the reason that there's so many movements on the back of the tariffs. Is it a risk on, risk off play? So cryptos are seen as riskier assets, and when people are uncertain about tariffs and what that means for economic growth, as a result, people tend to go towards the safer assets, gold, government bonds, that type of stuff.
Yeah, I mean, I certainly think that's a fair assessment generally for the markets as they move. And as I say, there is that connection to Donald Trump's kind of whims and vagaries. It has been moving the market of late. But I also think too that certainly we've seen, the narrative of what moves the price in crypto shift in recent years. And it's certainly become more exposed to the wider macro environment that it's operating in. And I'm talking here probably about the top 5 to 10 currencies within the crypto ecosystem, and then their impact that they have on the rest of the wider list of crypto that's available. So, they're certainly more exposed to the macro economy, and what we see there then, as I say, kind of gets echoed and rippled to the rest of the markets.
Okay. I want to get on to Ethereum in a moment. Before we get there, I'm just interested in the sorts of volumes you're seeing being traded at BTC Markets, not just in the last 48 hours, but really since Donald Trump's election, and then particularly since over the last month, since his inauguration.
Yeah, certainly. I think I probably would describe it as brisk. I don't think we're quite yet in the full-on bear market territory. I don't think bull market territory. God forbid a bear. I don't think we're quite at that point yet. And it doesn't feel, certainly from what we're seeing and the data sets that's sitting behind, we can see that there's a lot of capital waiting to be deployed into these markets. So we're seeing money that's not yet moving, that's not yet trading. So people are waiting. And certainly if you look at the fear and greed index, which is like a sentiment indicator, which I think is beautifully named fear and greed index on the CMC. And we can see there that we're now in a market of fear, meaning that people aren't necessarily feeling comfortable yet to come out and start to deploy. So are we seeing robust? Are we seeing brisk trading? Yes, absolutely. In particular, looking at the XRP trading pair, which is we're probably the biggest market in Australia for that particular XRP AUD trading pair, and that has been doing very well in terms of volume since the Donald Trump election result, because he's seen, as we've said, about being pro-crypto, or certainly, anti overreach of regulators. And I think XRP and the Ripple project have been part of, I felt the impact of that. But now it's going gangbusters, as they say.
I want to talk about some of these specific cryptos in a moment. We'll take a quick break and be back in a minute. My guest today is Caroline Bowler, CEO of BTC Markets. Ethereum. Now, to fall, it's the second largest cryptocurrency, to fall 26% in one session. Sure, it's bounced since then. Why was that one hit so hard? Because Ethereum is different to Bitcoin.
Yes, absolutely. And it's number 2 for the market cap for crypto. And I think that's probably why we're seeing the retractions. Bitcoin itself, because it's got such large volume and such liquidity, we don't tend to see at this stage now such large swings. We'll see generally swings maybe topping out at about a 10% swing. The rest of the crypto universe, though, has been more vulnerable to those larger movements. And Ethereum yet still doesn't have that same weight, that same gravitas. It's still more prone to those vagaries. And I would also say too that, this, because there is so much concentration in Bitcoin, it's also probably immune in some respects to some of these market movements. I think there's just considered that it's just going to be around for longer, or there's more sense of stability. Ethereum, although as I say, it's number 2 in the market cap and has been for a long time, it's still, I don't think, as widely known amongst I suppose the non-crypto native trader who's coming in. So I think that they're still trying to figure out what that's about. And my own personal view on Ethereum is certainly bullish. My own personal view is that I can see its play within the wider blockchain ecosystem. I'm a fan of Ethereum. I think I'm on the record to saying that. Not financial advice, of course, but I think there's a lot that's very interesting and still to come within that ecosystem. I think we're only just touching the surface.
Where do we go? So at the moment, there's a lot of noise about the place, but fundamentally what you said at the beginning of the show is that the regulatory environment in the US is positive in the Trump administration. So once we get through the noise, where do we go for the rest of the year, do you think? And then the second part of that question is, ultimately, do cryptocurrencies, do we end up with the 10 big ones, or do we end up with 500 of them? So firstly, this year, where are we going?
So for this year in particular, I think we're going to see, we can already see that Trump is very closely aligned with the technology companies in the United States. And he's very clear on that technology message. And I think that is a drum that's going to be beaten for the remainder of 2025 and into 26. If anything, he's trying to make that a real linchpin of his presidency. And we all know he's only got a limited time where he can actually be effective. So he's really pushing it over the next couple of years. So I think, as I say, it's a drum that's going to be beaten. We know as well with that sovereign fund that he's now bringing in, that's going to undoubtedly be invested heavily within technology. And all of that has a play within digital assets and within cryptocurrency. And just, there's a distinction between a digital asset. A cryptocurrency is a digital asset, not the other way around. And I think what they have said, and certainly we're expecting an announcement to come out around what the United States is going to do to position itself as a leader within digital assets. And we know that's coming, from both the House and the Senate are all involved in this alongside the president to try and push forward the US's role within digital assets. The reason why that's important is because that tells us then, okay, this is now going to be the narrative for financial services for the next couple of years at the very, very least. It certainly is going to accelerate and push forward what was already happening. I mean, the financial services industry itself was already moving towards that digital asset ecosystem. But this is absolutely going to be a punch forward for that conversation, not just in the United States, and because obviously the rest of the world will have to catch up or try and keep up with whatever direction they take.
Okay, so, I mean, in a sense, the outlook is good next year or two because of the regulatory environment. Where do we end up with digital assets?
I can tell you now, and I'm not sure strictly what time frame we're going to see this on, but I can 100% guarantee that everywhere in the world, digital assets will be the new financial services system. 100%. And I think we'll see that potentially, we'll see this, the roots of that start to come through now. I think when we look back on where we were, say in 7 years from now, we look back at where we are now, we will point to 2025 as being that pivotal breakthrough year. The ease of use of digital assets within financial services, the low cost, the efficiency gains, the variety, the accessibility will just make this such an inevitability for us all, in the same way that, your mobile phone and social media, have become all encompassing within so many of our lives. I suspect and would be confident to say that financial services will go in the same way. That's, as I say, distinct from cryptocurrency, but part of cryptocurrency is part of that wider shift. So it's great. I mean, particularly in a country like Australia, where people are financially literate and where people are excited about taking ownership and having a greater sense of control around their financial destiny. Things like digital assets will be, a balm to that. They're going to, I think, really enjoy and appreciate what it's going to give them.
Yeah, I mean, we're out of time, but I just want to dig down a little bit deeper. So within digital assets are cryptocurrencies as a subset of digital assets. Within cryptocurrencies, we have all sorts of Bitcoin, Ethereum, etc. Where do you think those ones will play in the financial ecosphere in the future? Is it mostly the big ones that make it and the others don't?
Well, I remember the dot-com boom without aging myself too much, and who could have particularly backed a winner at that point in time? But we're at that kind of stage. What is interesting, and I think certainly if people are looking to explore more of the assets outside of just Bitcoin, having a look at platforms like Ethereum or Bitcoin blockchains like Ethereum and Solana, for example. Solana is kind of catching up to Ethereum in terms of its use case, and you will get to understand a little bit about the technology that these digital assets are being built upon. And I think that's the difference. If you look at, what Bitcoin is as opposed to Ethereum and Solana, those guys are the utility plays. Those are the tech platforms that we're going to build out the rest of the economy on.
Caroline, thank you for talking to Fear and Greed.
Thanks so much.
That's Caroline Bowler, Chief Executive of BTC Markets. This is the Fear and Greed business interview. Remember, this is general information only, and you should always seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.